Hey guys, welcome back to another video. If you guys are brand new, welcome to the channel. My name is Akil Stokes. I'm a Forex trader, a trading coach, and also one of the co-founders of Tier1Trading.com. And this is a weekly video I put up on YouTube really for two reasons. One, to help educate new and aspiring traders. And two, if you are already an experienced trader, it's another set of eyes on the market. Whatever the reason may be, I hope you enjoy it. If you do, make sure you hit that subscribe button, make sure that notification bell is hit. That way you don't miss this video when it comes out each and every weekend. Now, to give you a little bit of background about me before we get into the technicals, because this is going to kind of go hand in hand. When asked about what type of trader I am, I typically say I'm a price action trader, right? I can trade trend continuation, counter trend, structure, all types of different, advanced patterns, simple patterns, all types of different strategies in the market. They kind of all come together in what I just call price action, right? Looking at the price charts. But it didn't get started this way. This was something that I've been really working on for years and years and years. I've been trading for about 13 years now. I think 2007, maybe more than that, 14 years. And it's kind of been really a consistent addition over time. And when I first made the jump from being a struggling trader to a consistently profitable trader, I did a hard reset. I kind of forced myself to erase everything that I was doing before, all of the dumb stuff that was not blowing me money, but making consistent donations to the market for my future education. That's a nice way of saying it. I decided to kind of cut all that out and focus on a single thing, right? Master a one strategy. And then once I can use that one strategy to start producing profits, slowly add and diversify my portfolio, not just pairwise, but of ways and techniques that I can use to attack the markets. And the strategy that I ended up choosing, or the one that ended up working for me, was advanced pattern formations. And the reason that was is because I needed structure in my trading. I wasn't very strong in the trading psychology department. I was breaking a lot of rules. I didn't really trust myself to, when it came to giving myself permission to interpret the market. I wasn't really good at having a rules-based trading plan. So when it came to like simple pattern formations or pullback trades, I was kind of doing what I wanted to do instead of doing what I should have done. So I flocked to patterns because it gave me a lot of structure. It was, aside from the initial impulse leg, which is the move that starts the pattern, it was black and white, right? If we hit this level, then I look for this. If we hit that level, then this should be the completion. There was little room for me to mess up. And that's just what I needed at the time. And I work with a lot of traders who follow the same route, where they start off with advanced pattern formation because they feel like they need that discipline, they need that structure. It's something that is not simple, but easy for them to follow because of the rules base. And I got a question from one of the traders I work with the other day saying, Akil, he was sharing with me some of his testing results. He says, Akil, is there anything else that you look for when it comes to patterns, right? Do you look for example, directional bias? In every other type of analysis we do here at Tier 1, we always use something called an IPDE process, right? Identify, predict, decide, execute, where we identify what's going in the market. We use that identification to make a prediction that sets up our directional bias, and then we want to execute our trade in the same direction as that directional bias, meaning that if we analyze and we determine that we're in a bullish market, we only want to look for bullish opportunities. Patterns are a little bit different, right? Patterns, I look at them as being a strategy, advanced patterns, I should say, a strategy in its own right, meaning, I don't have those directional biases. We could be in a bullish market and get a bearish pattern, I'm taking it. We can be in consolidation where most patterns are formed, I'm taking it. So I say we don't need it, but it doesn't mean that it's not important. And every once in a while, you're going to get a pattern formation that lines up with your overall directional bias. And what that can allow you to do is take really extended targets, treat it very similar to those home run trades I talk about all the time. And we're going to start off today by looking at the pound yen, because this was a good example. Even though I couldn't personally take it, I took it as a pattern. I couldn't take it as an extended target pattern because of a non-violation on my data, but it's a good example of how we can use an advanced pattern formation, not just as an advanced pattern, but as an opportunity to get involved in a bigger trade as well. So let's check it out. All right, so I'm here on the pound yen. We're gonna start on the daily time frame, which is my personal higher time frame. So this is my bird's eye view of the market where I look to kind of gain perspective and do the first two parts of that IPDE process, identify what the market is doing and ultimately predict which direction I want to be in. And these weird boxes that you see on your screen, these are called Vs1 levels. These are visual support and resistance levels. I have them set to a higher time frame, and this time frame, that's why you're seeing bigger ones and smaller ones. Essentially what they are is they represent previous zones of structure that I should be paying attention to. And although I can do this manually, and I advise that any new trader out there learn how to identify structure manually, this helps because it really stops me from making any mistakes, right? I can easily look at this chart right here and say, oh man, look at that, Akil. We're trading in the middle of no man's land. But because I have that big blue block, right? There's that big blue box, say that 5 times fast, stretching to the left. I know that if I zoom out, there's going to be something over here. And that's kind of just a reminder that I need to say, hey, Keel, there's structure here. You know, don't be too, or you know, pay attention to it before making any type of decision in the market. And what you're seeing here in the pound yen, right, is a consolidation after a previous level consolidation. So I'm going to erase these zones real quick for you, but you can see that price action previous sorry about that. I downloaded a new version of Camtasia. I didn't change the shortcut key. So my shortcut key to draw something on NinjaTrader here is actually giving me a different view here on my price charts. We'll just do it manually. But you can see, right, we have a previous level consolidation here, right? And then we started trading above it, and we have another previous level consolidation here. And when I see price action line up at the tops like this, right, my assumption is that we are going to see a bullish break. And if you remember the zone that we drew out before, right, there's a previous level of structure looking left, right, as we get above this level right here, all the way up here around 155.50s, 156s. So certainly opportunity for price to go higher. So I want to keep that in the back of my mind here. And as we zoom in, you can see more of the consolidation that's happening. Let's just go down to a 60-minute time frame real quick. And what you're going to see here on the 60 was we actually had a pretty nice advanced pattern formation complete right down here. X to A, swing low to swing high, A to B, just nipping, or maybe not just nipping, but getting past the 50% retracement. B to C right up here, giving us a 786, and then a CD completion down at our 886 for a very nice bat pattern. You can see this bat pattern was in line. This is a bullish bat pattern. It was in line with the overall directional move of the market. So for a pattern trader, you can either trade this by itself as a pattern. That's what I did. We ended up hitting target 1 and target 2. You can just use this pattern formation as an entry reason into the bigger trend continuation trade. So instead of waiting for your normal reason for entry on a pullback, you can get in more aggressively with an advanced pattern formation, or you can do some type of combination where you trade it for both, where you take maybe first targets off as an advanced pattern and you hold on for second targets for a bigger move. Now, would you have survived this? All depending on where you're taking targets at, all depending on how quickly you roll stops to break even, or if you roll stops at all. But it's a perfect example of being able to identify an advanced pattern formation that is in line with the underlying trend. Now, bigger picture, because obviously this has played out already, what we're looking for is a fresh break, right? Nothing has changed with this opportunity, right? So if we can, this is weird right now having my shortcuts, if we can violate this previous level of structure, nope, did it again. Oh man, I got to get these shortcuts on here. This is so weird. If we can violate our previous level of structure right here, this yellow line, then, right, that's going to reset our thought process. We can identify a higher high, higher close. We can predict a continuation higher. And we know that we've already kind of analyzed and decided where we think we can go higher to, 155.50s, 156 evens. You can see we have plenty of room from the high of 154s all the way to those levels. So what I'll be looking for in the market next week is a fresh break of these highs, a chance to kind of reset and continue to look for opportunities to get in on a bullish continuation trade here on the pound yen. All right, next up, we're going to head to the euro dollar. And euro dollar is an interesting one. We're in a bit of a consolidation here. Again, you can see that we've just created a new Vs1 level, a previous level, or a recent level, I should say, of structure resistance up here. But even looking left, right, you can see the nice wick that formed over here. So we've come up into a previous level of structure. And although we created a higher high, higher close right here, this level of structure has held. So I'm not too sold on us continuing higher, right? And while we're in that reversal zone, there's also nothing to really predict that we're likely to, there's a great likelihood for us to continue lower. So we're kind of in that consolidation where we can go either way. These are excellent opportunities to kind of play structure to structure types of trades. We talked a little bit about that last week. And if we go down to the 240 chart, the 4-hour chart, you're going to see that we have a 2618 trade setting up, right? So price action has previously double topped up here, right? We've came up, we've tested this level of structure, we reversed, we tested it a second time, we've held, and then we've rallied down. We've rallied down right to what would be the initial targets. Well, we're coming right back up to a previous level of structure. As of right now, this is still Friday afternoon around, what is it, about 3 o'clock. So the markets are pretty much done, but you never know. You may see some funky movement to end the week. But currently we're trading, right, at the rejection level of this week's kind of CPI move. If you guys weren't involved in the market this week, and if you're paying attention on, what was it, Wednesday? I think it was Wednesday. CPI news came out. I did a whole rant in a live room. You can go back and watch the recording about how I think it's a bunch of junk. The report doesn't mean much. Although I thought the market is going to make something of it because it wants to make something of it. But we saw a lot of whipsaw action. We saw the market move up and then move down and then move up again. It also offered a pretty cool opportunity, if you don't mind me kind of diverting real quick, of kind of the dumb stuff I used to do as a trader real quick. If we go back to that CPI news, which was right here. This was the old me, right? Where I was kind of impatient, non-rule based, all the bad stuff you can think about, right? And the old me would have done this, right? So this is when our move started. The market dove down. You can imagine all of this happening in a matter of minutes, right? The market dove down. At this point, I would be like, oh my gosh, we're moving lower. I gotta hop on the train. Everyone else is making money but me. And I would sell it down here. And as soon as I sell it, it would reverse up. I'd get stopped out, or, you know, probably didn't even have a stop loss at that point in my career. So I'd panic because I'm now in the red, and I'd be like, oh no, the market's gonna get me. I gotta get out of my short position. What I'll do is I'll buy it, and this was a fake out, a fake break, and I'll buy it. I'll make up for my losses and make some money. So I'll exit my position here at the top, and then I'll buy it, and then the market will take me up. I'll get excited for a little bit. Yeah, I did it right. I'm gonna make all my money back, and then I come back from, you know, partying and celebrating, and then see that we dove back down, and I would lose on both ends. That is the story of my early trading career. Leave me a comment in the section, comment section below if you've ever been there, because I think you'll be amazed at how many traders are actually in that same boat. It's very interesting. Typically, we feel very, very alone in trading, especially if you're on the internet, because no one wants to talk about the negative. They just want to talk about how good they are. Misery loves companies. I think it's quite refreshing to understand that there are people out there that did the same dumb stuff that you did, and that's that's the story of my coaching career. I'm going to explain to you all the dumb stuff I did, so hopefully you don't have to do it, or at least do it as many times. But back to our regularly scheduled program. Price action has come back up to our previous level of structure right here. And this is going to offer us a 2618 trade. And the 2618 trade is a trade that you look for a double top or a double bottom. You measure a Fibonacci retracement from the swing high to the swing low. And then you look for a reversal zone starting at your 618 and then ending all the way up at your previous structure high. So this purple zone right here, this would be the zone in which you're looking for your 2618. Obviously, if you're aggressive, you can enter right at the 2618. If you're more conservative, you're looking for your reason for entry while you're in that level. Target-wise, what you're looking for is two things here. One, a retest of our lows, this previous level of structure, and or an extension lower, right? An extension lower can give you two things, right? One, you can look for an AB equals CD pattern. We don't really know if this is going to be, we can't measure this out yet because we don't know where this reversal is going to be. But as of right now, an AB equals CD will put you down at 120.10s. You can also take out your Fibonacci extension. It's so long since I did all this manually, right? Fibonacci extension tool, Fibonacci from swing high to swing low, and back down. You can see there's a 127 Fibonacci extension lining up right at that level. Now, here's the test for you guys, right? What else do you see potentially lining up at that level? I'm gonna take a quick drink, right? Probably bad for YouTube, but it is what it is. What do you see? Check it out, right? We look at this initial move. Swing low to swing high, X to A. Fibonacci retracement, A to B. Ignore the thing in the left where it gives you the answer, right? B to C right here as we currently stand. Again, if this pushes past the A, it would violate it, but as we are right now, this would give us a valid C leg. And if we were to continue lower right at that level, potential bullish Gartley pattern. So we actually spoke about this a few weeks ago in our Q&A. I don't have it up right now, but if you're on the platform, go back and watch it. We had a trader that was working on, this is called an aggressive C. It's something that gets my blood boiling, just like correlations. I absolutely hate it, and I can go on an hour-long rant why I hate it. But if you can do it the right way, it can actually be a positive way to trade because you're going to have an incredible risk reward. But it's essentially trading, instead of trading the completion of a pattern, attempting to trade the last leg of a pattern. But the trader we spoke to actually had an idea on how he wanted to do this. It's a good watch if you guys are on the platform. But essentially, this would be a way to trade that aggressive C if you wanted to. You'd be getting involved at the C leg. If you're trading it all the way down to the lows here, you get about a 1-to-1 there probably. If you're trading it down to that aggressive C, you can see it's going to be a pretty significant risk reward there. So that's kind of the benefits of doing it. I don't advise you trade aggressive C's by themselves, but in a situation like this where kind of like the pound yen, if you have a different setup that can give you an excuse to do a different trade, now you've found kind of a hack to be able to get to do it without technically breaking your rules. So I have a few more on my radar, but because I tend to ramble, we're already running a little bit long. So let's just take a look at the New Zealand yen. I like this for a breakout situation. Now we're doing a few things right now. Again, those annoying Vs1 levels are up there showing you that we are at a significant level of structure, both current time frame and higher time frame. They're going to come into play a little bit later, but if we just take a look at what's been happening here, right, with New Zealand yen, we have been doing two things, right? We've been holding our highs right here. We've also been consistently making higher lows right here. And for me, when I see this, this is very similar to an ascending triangle, right? When you see the combination of the highs being held, yet the lows becoming higher, I anticipate a breakout to the upside. So I'm looking for a breakout to the upside here in New Zealand yen. Now, the interesting thing about this, and this is one of the positives of having those Vs1 levels out there. By the way, they are available with your trial membership on the Tier 1 trading platform. 14-day trial, www.tier1trading.com. Get the Vs1 levels, get the pattern recognition software, live rooms, training courses, all the fun stuff, network with community, sign up, right? Shameless promotion. These things give me a heads up that, hey, there is a level of structure looking left. So instead of just breaking these highs, which I drew on pretty poorly, but at 79.42, in order to get a true breakout, we need to see a violation of the top of this Vs1 level, 79.61. So remember, that's important because we can get a higher high, higher close and not officially break out from the structure looking left. But I want you to pay attention to something, right? If we do break out of that Vs1 high, right? That's this one right here. you can see where the next one's at, right? So our highs right here are at, what did I say, 79.64. The next VS1 zone starts at about 81 even. So there's a significant level, significant amount of room to the upside if we can violate that level. So something to put on the radar is a breakout of that level. Obviously, there's different ways to trade. If you're a breakout trader, boom, trade the breakout. You could be aggressive or conservative doing that. Pullback traders, you already know what we're looking for, right? If you watch this video each and every week, it's pretty simple. Breakout, pullback, look to ride the extension up. All right, so 2 things to jot down. 1, free trader workshop coming up soon, the week of the 24th, I believe May 25th, 26th, 27th. Free 3-day trader workshop. If you've ever been to one, you know it's amazing. If you haven't been to one, mark down your calendars. You're not going to want to miss it. I guarantee that you'll learn more there than you'll do in some of the courses that people are selling out here on the internet. 2, Jason Graystone Myself. We got a new YouTube channel, right? A new show called Traders Coffee Break, right? I'll put a link in the subscription box below. We premiere next week. It's going to be some amazing weekly discussions. Check it out. Make sure you subscribe to the channel. All right. Until next time, guys, plan your trade, trade your plan, hit that like button, show me some love in the comment section. And I hope you guys have a great weekend.
Without wasting years of your life. Now, they're going to look at 2 other keys to go along with this, and they're going to be called sub-keys. Why is that? Well, they're actually part of the primary master key, which is the backtest to profitable trade plan. These other 2 keys are things that you will do inside of the plan, but they're so important, I wanted to break them out and show them individually to you as well. Second one, the first sub-key anyway, is how to make more profits by being wrong more than you're right. That's right, actually be wrong more than you're right and still actually make more profits. Pretty amazing. And then the second key, or this third key and the second sub key, is how to almost double, if not double, your profits without changing your trading strategy. Okay, this is pretty amazing. You actually do the same thing, and I'm going to show you how you can actually double, if not double, your profits without changing a single thing about your trading strategy. All right, so now it is time to take out your pen and your notepad, and we'll get started with key number 1.